Hey guys, Akiba back for another episode of the SlateCast. Today we're going to be talking about insurance in the crypto space, which is a pretty important topic given everything that's been happening with FTX and people getting really concerned about whether their funds are safe or not. So stick with us and we'll be right back. Okay, well, welcome Dan from InsurAce with us today. Dan, how are you doing, mate?
Yeah, good. Thanks for having me.
No, thanks for coming on. So you reached out last week with a new product that InsurAce offering, and I had a look at the press release and thought it was like so relevant to what's going on and potentially so revolutionary that wanted to get you on the podcast to have a little bit of a chat about it. But I think before we just jump to that, what's been your experience of the crypto industry over the last 2 weeks? Obviously, you're providing insurance for certain types of situations that may occur in the crypto space. Have you had to do any payouts over this time? Has it been a busier period? What's things been like?
It's crazy to even think it's only been a couple of weeks, right? It's, I mean, I think we keep making the same joke. It's been what a crazy year the last 2 weeks have been.
Yeah.
No, it's been mad. So it's obviously been a massive roller coaster from start to finish. I was at Solana Breakpoint, listening to how bullish everyone was on Solana ecosystem, even meeting the FTX guys there. And obviously there were rumors about everything from that just the week before, that Wednesday when the balance sheet got leaked, all the way through to following it all unraveled in the last couple of weeks since. So it's been obviously a roller coaster for the entire industry. I think even watching, hearing about all sort of devastating stories some people have gone through. I even had to, give the bad news to a friend of mine myself when he wasn't aware that BlockFi had been affected, and I literally watched him on on a late night out go from super happy to really like incredibly depressed, having lost six figures in BlockFi without and watching that to go through all these same emotions we've all had to deal with lately. But yeah, it's just been intense for everyone, and there are some silver linings here and there, but it's not, it's tough for everyone. In terms of like payouts and things, we did have a little bit of exposure to FTX. We had around 40K in coverage bought for FTX. So it looks like, due to it being a custodian type and going through bankruptcy, it looks like they will be able to claim, but it will take a little bit of time for the claims to be processed. But we should be making all of our customers whole again that did suffer.
So, I mean, I think some of the talks around it's going to take years, if potentially decades, to actually unravel the whole FTX solution. So, if you're saying it may take some time, you're obviously talking about a lot less than decades to get the money back.
Yeah, I mean, it's pretty obvious when it's going through bankruptcy, and it's pretty obvious that they've got a massive shortfall on their funds. So paying out on chain sort of insurance solution is pretty obvious that it's happened, and we should pay out. We might try and stipulate some clause that they have to KYC themselves to be able to pay back in the event they get paid back anything. But the reality is, you're looking at 5 cents on the dollar for most people, so it's pretty much a catastrophic wipe out of their funds if they had them based on them. So yeah, no, it's been tough. It's a great use case for insurance in the space as a whole, which is I guess one of the small silver linings here. But on the one hand, it obviously shows that there's still a lot to overcome in the space, a lot of problems that we need to fix. On the other hand, these do force us in the industry to improve and to be more aware from retail side. So on the one hand, yeah, you force other exchanges and other custodians to be better going forward, because people are more aware. They don't take the same tricks lightly. They know now. They know how to check, and they become more aware of these a lot quicker. But so it on the same other side of the coin, it does, the people and users it does give a good sort of use case for DeFi as a whole. It shows that there are benefits to DeFi over CeFi, or that CeFi needs to really step up its game to go forward. Do I think people will still just make the same mistakes? I mean, probably. You saw pretty much straight away everyone just oh, which exchange can we use now, and they'll jump straight into Binance or Coinbase or whatever. And is that just doing the same thing and making the same mistake again? Some say yes, some say no. There's obviously lots of different views on crypto Twitter about that now. But the main part of it is that I think as a whole, the industry will be better for it in the long term. Yes, it'll take the regulators and liquidators months, if not years, to unravel, maybe the decades, to unravel the full craziness of the accounts, because apparently there weren't any accounts at all. So being able to actually unravel that.
You read the reports from John Ray, the current CEO, and it sounds like it was just no records. They're having to go through like cash receipts and stuff to try and figure out what money's meant to be where, and it sounds like an absolute shit show, to be honest. It's sad, isn't it? Because I think the last time we spoke was probably over Telegram. It was probably back in May during the whole Terra Luna collapse. So unfortunately, it seems that the time when you and I talk is during kind of bad situations. But part of that is because you're able to sort of help people lesser that impact. And one of the things I wanted to talk about is this new crypto deposit insurance scheme that you've launched. Do you want to tell us a little bit about this? Because just from sort of scanning the press release, I mean, it sounds pretty great, and kind of seems like it could be part of a solution, and sort of brings in some of the elements that people feel like the safety they have within traditional banking, whether it's there or not.
Sure. Yeah, no, happy to go through it. Yeah, I think it's funny that we do actually only talk when it's bad stuff, but I think that's only because we don't run around doing the naysaying. We're not the kind of people to be like, oh, this is going to happen to you. Watch out, it's dangerous. I don't think that's a nice narrative to be shoving down people's throat.
Yeah, not selling to be fair. Yeah,
but showing that we are here to protect people is actually the right thing to be doing. Which is exactly you're right. Which is exactly what CDIS is. So the CDIS, the Crypto Deposit Insurance Scheme, is a new product coming out from InsurAce, which is exactly that. It's an FDIC style, or SDIC if you're in Singapore, type of insurance coverage, which will protect the most vulnerable users of CeFi. So this is exchanges, custodians, who will have to sign up to this, and we hope that it will become an industry standard. A stamp of quality, a showcase that they are willing to protect those who are the most vulnerable to these exchange collapses. For us in the sort of Western spaces, it's maybe we had slightly more on the exchanges, maybe we have slightly more impacted, but it's also we live in societies where you can earn that back faster, whereas having something like CDIS, which will protect users up to the first sort of $10,000 initially, and we hope to increase that. Protecting them up to the first $10,000 will go a lot further for a lot of the most important and vulnerable customers. It won't help the big funds, it won't help the big institutions who lost huge amounts of money, but it goes a long way to protecting the much smaller retail users who suffer the most when these things happen. And I think that's important.
Yeah, no, definitely. I want to say, because I mean, ultimately with institutions, that's down to their own risk management, and they have options around hedging and maybe not using customer funds to bet on the markets could maybe be an option for them. But yeah, retail users they don't have options. And one of the things I'm actually quite passionate about at the moment is the narrative of kind of not your keys, not your crypto. It's a fair statement, but what people miss is, for me, it's the same as hiding money under your mattress in a lot of ways. Obviously, someone can't just necessarily take the physical Bitcoin from under your mattress, but there's a ledger. And if your house burns down, or you get robbed, or you've got to leave suddenly for some reason, it can be difficult, and there's a lot of responsibility. And then there's a lot of people in the world that don't have the means to keep it in 4 different places and have a safe and all these different things that people do. So I think that currently, until we have better ways to manage private keys, and there are solutions that are being built throughout this bear market, that centralized exchanges do have a role for people that aren't comfortable with the responsibility that comes with holding their own keys. So for me, this sounds like,
of course, and the CeFi, again, obviously, the arguments for not your keys, not your wallet are more evident than ever, and I think that's been one of the other silver linings here. It's been a great showcase for DeFi as a whole, and showing that it is a safer way of tracking funds. But at the same time, the introduction to the crypto space is usually through a centralized exchange. And then obviously, yeah, you're right. People they don't want to spend $70, $80 on a crypto wallet to be able to store it. You know, they might have it on their phone, but maybe they don't see that as the same as just having a centralized exchange anyway. So it is tough. But I think it is the most interesting factor of this whole FTX drama, I guess, was realizing, actually not the most exciting, there's plenty of exciting things in there. It's and a few horrifying facts as well. But no, one of the interesting facts that came out of it was the nations that were most using FTX, and it wasn't what most people would have thought. Most people would have thought Europe or US or Canada. No, Singapore, South Korea, loads of Asian nations. Indonesia was huge up there. Same with Malaysia. These poorer countries with the average investor, up to 10,000 is a lot. For Western cultures where maybe that's not as big a hit as there, but for them that would be a significant chunk of their their investment, and to be able to protect again those users who that means a lot more to is something that's incredibly important here. But it also goes a bit further than that. It also shows that the exchanges and custodians are willing to participate themselves. So as part of this CDIS scheme, they will have to participate. They will have to guarantee those deposits. They'll have to contribute to that pool to be able to participate. And I think that goes a much better way of allocating their funds to showing that they are supporting in the event that something crashes. And then those funds will be transparent on chain, visible to anyone. So anyone can prove that they have enough deposit scheme protection available should they actually have any instance.
So what exchanges are you likely to be launching on? I see from in the notes you're backed by Huobi DeFi Labs. Huobi's be one of the first exchanges?
So we're speaking to, obviously it's a new one that's come out the back of FTX collapse. So everyone's still looking at seeing what they can do to improve. I think for now the exchanges are all scrambling to prove their assets on chain. I think that they've all got quite a lot of priorities, and that's what we're calling. We've had calls with every of the top 30 major exchanges and custodians. So we've been called on. The reaction's been very positive so far, but obviously it's kind of a domino stacking. So that's where we're encouraging the entire community, DeFi and CeFi, and just any crypto enthusiasts out there to pester their favorite exchange, their favorite DeFi and CeFi company to support this initiative, because it really does go a long way to providing not even regulation, but a industry standard. And I think the standard maybe becomes more important in the space than regulation. So by having an adopted standard goes a long way to say we are proactively doing something in the space that is in the same ilk as regulation, but we're doing something that looks like regulation, but can also guide regulators in the future, rather than coming in heavy-handed and telling us what we can and can't do. By having something here that protects those, again, because that's at the end of the day, the people who most governments should care about the most is the vulnerable users.
Yeah, and I think for me, one of the issues around crypto regulation is how do you regulate a decentralized network? Because if that regulation is coming from centralized bodies, then it just doesn't work. I mean, you look at the OFAC sanctions currently causing havoc on the Ethereum ecosystem. I think now it's up to like 78% of validators aren't including Tornado Cash transactions in blocks. The outcome is it's not censorship, but it's a slowdown in transactions. And did some research over the weekend that finds it's really interesting that even on Ethereum, if we get to 99% censorship or OFAC compliance, let's call it, block times for those transactions that are non-compliant will be about 3 hours, but they'll still go through. So that's fantastic news. But I still don't think that the US should really have any say over global decentralized transactions. Your insurance model has a DAO governance element to it. So where you say there's an element of kind of like guiding regulation, do you feel that projects like this in tandem with others could start to form the basis for a decentralized regulatory framework?
I think so. And I think, again, it becomes more of industry standards that get adopted. And I think those industry standards as best practices, if they are adopted and, again, on-chain improvable, go a lot further than regulatory framework, which can actually be quite murky a lot of the time, right?
Mm-hmm.
So, you can have regulation. Even FTX was saying they were FDIC regulated at one point before they got told to stop. The regulation out there is good. There will be some point of this when you can when regulators will get involved, and probably in the right way. Yes, they'll always be on the back foot. Yes, they'll always be behind. I think most regulators are still looking into ICOs from 2017. But I think that by creating an industry standard, especially in the Web3 community, means we will be able to adapt to it much faster. We can contribute faster. We can produce, policy and wording in a decentralized way much faster. And whether or not that is better or worse is probably for hindsight down the road to say. But for now, at least we can say it's something, and it should be moving in the right direction. At least it's something that will help, again, the people who need it the most, because they won't be able to say, they won't be able to hedge their investments. They won't be able to see these things coming. They won't have any pre-warning unless they were glued to crypto Twitter from that Wednesday until Sunday. You had zero warning that you're about to lose everything.
Yeah. I mean, one of the things that I did want to ask you actually is I think during the UST collapse, I actually used InsurAce and some of the other insurance providers as a bit of a gauge as to how big the risk was. I saw a massive increase in the number of protections taken out against UST, and therefore the rate went through the roof compared to the others. And I think that was actually one of the last red flags for me that, okay, there's a lot of people worried here. And if the rates are this high, then there is a real concern. And I luckily got my UST out of Swissborg literally hours before everything fell apart. Did you see a similar thing happen with your FTX backing? Was there an increase leading up to the halting withdrawals?
Yeah, we had one customer slip in just before we halted it. So again, we were quite on this. We were very lucky. We get we're not only are we attached to crypto Twitter ourselves, but we're very risk averse. So any sort of sign of danger, usually our community or someone lets us know, or we spot it ourselves. So we were very quick. I think Friday we had the sort of not confirmed warning because no one quite knows, but enough flags to say, right, stop selling. And I think someone got in there with a coverage purchase on the Friday just before, because again, you were looking at Europe versus Asia. Some of our team are based out in Asia time zone. So before our ops team managed to get on it the day after waking up, I think someone got a purchase in there. But again, nothing too crazy. I think it just took the whole industry by surprise, right? If you'd have asked 2 months ago, is FTX safe? Pretty much most people would have said, yes. Or if you needed to recommend an exchange, probably would have said that FTX is one of the top 5. So it's extremely, and I think that maybe there were some people who saw it coming, but I don't think there's as many as who are claiming to have seen it coming. I think there's a few people out there now saying, "Oh yeah, I saw it coming ages ago. I would never have touched it."
I know it's amazing, isn't it? You go on Twitter and you see everyone pulling out, like desperately going through the timelines of like Caroline and Sam and trying to find things, and then posting videos and saying, "Look, see, it was obvious." It's like you were part of the whole world that didn't see this coming, but now you're saying, "Look how obvious it was."
It's even the people who are now, especially sort of the celebrity figures in the US who are out there saying, "Oh, I never trusted them," but 3 months, then obviously people go and dig into them and find out they promoted their products like a year ago. So it's a really, it's a really tough one. I think it's I think the space needs the people promoting these projects, whether or not, and there will always be people who promote things just because they're paid to. I don't think that's a bad thing. I think that people make mistakes, and not everyone could do the due diligence that needs to be done. This, again, as a centralized entity, was next to impossible to see that there was anything wrong from the outside. And maybe just maybe, and it's a very bit of a stretch, but maybe if there hadn't been the run in the way it had, maybe they would have been okay. When it was essentially just the 3 billion hole, maybe they could have plugged it. But then that in 48 hours turned into about 10 billion, and all of a sudden it becomes an insurmountable mountain to climb.
But then there's always the argument that just means the house of cards gets built even higher, and eventually it will come down, because it was clearly a house of cards behind the scenes. But I am with you that there was obviously a catalyst. But I think you can say exactly the same about Terra Luna. Like the catalyst was the curve pools that got sold to high heaven, and then the rest of it came down, showing that the mechanics of it didn't work. So am I right in then saying that if this what's the acronym, CDIS was adopted 100% across exchanges, there would be no need for proof of reserves because you would provide that data essentially?
It wouldn't be a proof of reserves. It would be, it would show that they're contributing enough to the funds to allow, so again, we're not covering it all deposits on there, so it's no proof of total deposits. It's almost better for them because they don't have to give that data. Some of the exchanges are saying that by giving proof of reserves, they're showing how much of a run someone needs to have on them to essentially liquidate their positions, which can also be dangerous. So it's almost maybe not the best way to prove that they have it, because if they do, say they prove they've got 10 billion in assets sat there, for example, and then people realize they can squeeze them for that, that becomes dangerous in its own right. So maybe it's not the best way, but by having a scheme that does protect users and some form of on-chain verification for a particular user saying, right, there's my deposit, it's attached to my profile or my sort of Web3 wallet, then it definitely gives that sort of sense of security. And it's in the exchanges or custodians' best interest to sign up to it, because if they sign up to it, it shows that they are, supporting the industry and willing to be transparent at that level. Whereas if they don't, that on the flip side maybe shows that they are arguably shadier than they should be.
Yeah, I mean, there's also the argument that if you're depositing for spot transactions, then your funds ideally should be kept with a third-party custodian that the exchange can't necessarily even touch and definitely can't trade with them, because it sounds like, from what Sam was saying at least anyway, that a big part of the issue was the amount of leverage that was being used on the platform, and you didn't realize how big that was, and kind of balancing your books from that side. So
yeah, but even the big borrowers and lenders, even the big sort of custodians now are suffering because of these positions they had elsewhere and different aspects. All it takes is another Luna to happen, and suddenly the custodians are in trouble. So that indirectly affects it. So it's extremely difficult. I mean, to have this in a safe way. Again, the good thing is everyone's having these conversations now. So something will be better for it. Does it mean that we just all end up using Binance? I think not. But I think that any exchanges being built now, the next big one, the next FTX, will be done in a better way. Whether or not it ends up the same way is yet to be seen. But I think whatever comes next will be better for this.
So the CDIS isn't rolled out yet, I believe. It's coming. What are the next steps? So you say you're recommending people essentially like lobby their exchanges, saying that they want this if they like the look of the product. I'm assuming they can find out more on the website. What's the sort of timeline?
Yeah, so anyone can look at our Twitter, our blog posts, our website, to find out about CDIS. If anyone's interested in getting involved or wants to help out or thinks this is the way forward, please do get in touch. Or, like you said, lobby your exchange or custodian to get involved, get in touch, ask them if they're joining up to the scheme. If they're not aware of it, then they should be. We've got a big media campaign coming out around it, and we want everyone to sign up. We want this to become an industry standard. We want this to become a safety standard for the space. We want people to sign up to protecting, again, the most vulnerable among us. This is it's not going to protect everyone. It's not going to save from complete wipeouts, from big funds and big institutions. But it goes a long way to protecting the masses when it comes into these exchanges. The people who are just getting involved in the space, so they're not scared off. You want the next people to be building this. Imagine if someone's just put $1,000 into FTX and this happens like a week later, they might not touch crypto again, and that's not what we want. We want people to get involved. We want people to get into the space and learn about it, and that's not going to happen if they don't feel safe at the start.
Well said, Dan. I completely agree. I say the reason why a lot of us get into crypto is because a new financial system is ideally built for the masses and not for the people with the 1%. They've already got a financial system for them, so we need one that will work for everyone. Thank you so much for joining us today. It was really insightful and really great to learn a bit more about the CDIS scheme. And unfortunately, probably until the next catastrophe in crypto, I'll see you again next time.
Yeah, I mean, hopefully that's not too soon. But yeah, no, I'm sure we can do let's do a nice catch up in between when we've had a good week. Let's just say, did you have
Let's do a podcast where we can just be like, yo, we've not made any payouts. My life's been boring this week. I'm super chill. I've just been playing.
Great. It's been a fantastic week. There's been 0 claims this week. There's been 0 hacks. We've had a great week in crypto. Thank you very much. I've been down from InsurAce. Great 5 seconds podcast. Amazing.
I love it, Dan. All right, buddy. Just stick around in the backstage area for a second. But for this episode of the SlateCast, guys, thank you very much for joining us, and we'll see you next time.